So, all right, let's get started. So hello everyone. My name is Aaron Goins, and welcome to All In on Real Estate. I started this meetup because when I was in the military, no one in my circle talked about real estate. A lot of times they talked about we call it their savings plan. They talked about debt. They talked about different finances, but no one talked about real estate. So I wanted to start a meetup where people can learn about real estate and build generational wealth for them and their families. So I'm very, very excited for our guest speaker today. I met her on Clubhouse. She really impressed me, and I've always wanted her to be a guest speaker. So AdaPia, welcome to All In on Real Estate.
Thanks, Aaron. Thanks for having me. Thanks everybody for coming. It's a real pleasure to speak with you and get to know you as well. Aaron, do you want me to just where would you like me to start? How do you guys usually run the group?
Well, basically we start with your where you started from, why you get into it, like you talk about blockchain, we talk about a lot of things. So
got it. Okay, cool.
Yeah, the first thing I want to ask is where did you start with real estate, or where did that start from, and what got you into it?
Yeah. So I got started in real estate when I joined one of the very, very first real estate crowdfunding platforms back in the end of 2013. So I was employee number one, so basically a founder. And that's actually how I got into real estate, was from the entrepreneurial startup side. And I was the chief marketing officer. So I was responsible for brand and communications and PR and all things marketing. So that's how I got into it. Even though my career started when I was 18, I started working in a bank. I really understood from a young age, my parents pushed me, get a job, go to school, get a degree, get a job. This is how this is how you make it in the system. And I had several jobs in the finance industry. I worked at a hedge fund. I worked in insurance. I kind of worked in a lot of different roles, and up until about 2008. So I was at a hedge fund when the Great Recession happened. And so I was there to witness that whole thing, and Morgan Stanley was our trustee. And so that was a really intense learning experience to be at the fund at that time. And then shortly after, I left for personal reasons and discovered my entrepreneurial side. And I basically went into business with my sister, who was an artist, and she was having all these people reach out to her and say, I want to make you big. I want to do this. I want to do that with your art, this, that, and the other thing. And she's an artist, and she's like, I have no idea what's going on. She kind of got screwed from a publisher for when she did a comic book for them. And so I was like, okay, I'll help you. We'll set up a C Corp, and we'll get an accountant. And, it's it all started like that. We started with a MySpace page, basically. So, sorry, my dogs are just, hold on a second. Hey, babe, can you get them under control? They usually go for their walk right now. So I'm sitting here instead of taking them for a walk. Sorry about that. So basically I was like, okay, I don't know anything about this industry at all, because it ended up just being entertainment, consumer product. It was licensing. Eventually I was consulting for Disney and Mattel and doing intellectual property scouting, totally a 180 from finance. But I was having a lot of fun building this business, and we turned it into a global brand. And that's how I was really applying that business background that I had. And so as I was doing that, Kickstarter came along in 2009, 2010. And so we were doing Kickstarter and Indiegogo campaigns. And then I started doing that for other artists, directors, et cetera, musicians. So that's how I knew about crowdfunding. So when the Jobs Act came out in 2012, my finance sort of old self said, oh, you can turn your fans into shareholders. So I was like, I get this. I can do this. This makes a lot of sense. Now, that part of the Jobs Act didn't actually get fully finalized till 2016 with what's called Reg CF. But in the meantime, I was living in LA, and I was doing some networking in the Silicon Beach space. And so that's how I came across real estate crowdfunding. But up until that point, I owned 2 condos in Canada where I'm from, because everyone knows that real estate's a good investment, but what most people don't know is what makes it a good investment. So I had 2 condos, and that was my first exposure, but my real exposure was joining real estate crowdfunding and getting a crash course in hard money lending, because it was a hard money lending platform. And then equity when I joined the firm that I'm at right now, called Alpha Investing, and we syndicate commercial equity. Yeah. And so I will say this, like when I first started to understand about the equity side of real estate, I was like, hold on a minute. I have like all my series, you know, CFP, I have all this stuff. Everybody talks about the stock market. It's like, why doesn't anybody talk about real estate? And that was like, for me, I was like, there's like, how have I missed this? Like my whole like adult life, so to speak. But it's powerful. And yeah, a lot of people, even professionals, there's one of my investors, he's an investment banker. And when I first told him about what we do, he's a friend of mine. He was like, I don't believe you. He's like, it's too good. These returns are too good, super conservative, right? He's like, nope, I can't believe it. So he went off on this, like, I mean, talk about due diligence. He like called my husband. He's like, because he's my husband's friend. He's like, I love AdaPia. He's like, but I got to ask you, like, is this a real thing? Like he went so far as to call my husband to find out, because he couldn't believe it. But then he did all his research and then he figured it out. And now I've created a monster, and he's going to quit his investment banking job to invest, to go all in on real estate, although he's doing single family portfolios, so not commercial. But yeah, I mean, even like those are great examples of people that are in the, you know, the financial services industry. And yet real estate is just not, it just never comes up. There's literally like 2 pages about REITs in the Series 69 study manual. That's like the real estate exposure.
So I know that you do blockchain now and things like that. So how are you combining the forces together from your standpoint, and
Yeah,
where you want to go to with that? Because it's such a new exciting path that's going on.
It is. I'm not personally like doing doing that. I invest in Bitcoin and DeFi. So there's so much going on, right? Then there's like blockchain applications, there's DeFi, there's alts, there's Bitcoin, then there's NFTs. Like there's so much that like I almost can't keep up, you know? So I like picked the things that I want to get really good at and understand fundamentally. And so that for me is Bitcoin. So I recently became a partner in a Bitcoin fund because like, to me, that's the thing. As a real estate investor, I'm like, where's the asset? Right? Like where is the tangible in this world, right? Like where's the asset? And that to me is Bitcoin. That's my personal opinion. As opposed to all these other things. Like everything else is a startup, right? Everything else is a company. And so it's a very different world. And I think NFTs, which really are the tokens on which some people are putting real estate, I think there's a lot of exciting stuff that's going to come down the pipe. But for me right now, like I'm really focused on like old school syndication. Maybe one day something will go on the blockchain, because then it makes it a little easier to do secondary market trading. But that's a decision. Like we talk about this internally, like, is that what we want? To have people, right? Like, you know, you have your 99 investor limit, and those accredited investors, then after a year, they could turn around and sell their shares or portions of their shares to other people. And we're really relationship oriented, right? Like you really want to know who your investors are. Like we don't crowdfund, like Alpha doesn't crowdfund. So we have like personal relationships with our investors. And like, there's the question of like, and I know this from scaling that other startup before, the amount of marketing and ops that you need to put into scaling large customer acquisition or managing a large amount of customers is not insignificant. Like it's a lot. And so the idea of like potentially having like dozens of new unknown people to us just owning a token, like a share of the asset, and like emailing or calling, and not, maybe they don't understand what a preferred return is. They don't understand, you know, there's like a lot of risk. So from a risk perspective, we're like not so sure about that right now. I'm sure there's a ton of like really great benefits, but for the way we run our business, where we really like to know all of our investors, like you can't actually invest with us unless you have a phone call with one of the 4 principals. So like me or one of my partners. So there's trade-offs, you know, there's trade-offs. Sometimes it's really easy to think, oh, maybe I need like more investors and more is better. And I'm, you know, all these people, I'm going to put them down my funnel. There's a lot of work that still goes into converting those people. And in our experience, often unknown or maybe unsophisticated investors that come in for less money are pretty much always more work than an investor who does understand and puts a much larger amount of money. So there's scaling questions that go into that, and where you want to put your time. Or where the best use of your time is, you know, exponentially. So we think about that a lot in our business.
So, so I mean, you said that, you know, you see that as a future, maybe a future thing like that. So for syndication, where are you at for syndication? I mean, how many syndication have you deals you done, and what's your biggest takeaway with real estate syndication so far?
Yeah, so we've done 51 syndications, and the firm started in 2015. I joined in 2018. This year we'll raise as much capital this year as the whole previous existence of the company. So we really grew. We really grew. This year was just like blowout year. We've had projects in 19 states, mostly multifamily. Senior housing. Now we're doing single family rental portfolios at scale. So scaling portfolios. And we've had a couple other things here and there, like an office, did some student housing, a couple self-storage, but, you know, from a relative risk return perspective, we've just really focused on multifamily and senior housing. And it's all acquisition. So it's no development, it's all acquisition, and it's mostly value add. There's a little core plus, but it's mostly value add. Let me see. So now we write about $7 to $10 million checks. So we come in as sole or primary LP into a deal. So we have approval rights. So that is something that we were working towards for a long time, having those approval rights, because we started as gap equity. Okay. So this firm, before I joined, even when I joined, actually, we were writing like $500,000 checks, you know, $500,000, like maybe $2 million with the senior housing sponsor, because that was like a personal relationship. But we started there, and then we grew it. So you hear a lot of stories about people who are able to scale, and it's really, like, in my experience, it's like one foot in front of the other. It's just like really like taking it one day at a time and staying the course. And like, there's like lean times and there's tough times. And then if you have your investors' best interests at heart and you do the right thing by them, there comes a day where, for whatever reason, nobody knows, I don't know, it feels like it happens all of a sudden. It's not sudden, but it feels like when it tips. And then within a year, we were writing. I remember when we did our first $3 million raise, and we thought, we don't know if we can do this one on our own. We don't know if our investor network really has that demand. And so we brought in like a co LP, and we realized like we actually could have raised the whole thing by ourselves. And then like 6 months later, we wrote our first $7 million check. And now the 7 is kind of like floor. So it just kind of like that curve, when it really goes, it really takes off. And it's just a real dedication and a commitment to, I would say, the underwriting and the investor relations.
So it was little increment steps that went from, you know, from like you said, like from 7, well, from little bit. So, you know, $500,000 to $7 million as a ground floor now for you. And I think that's awesome right there. So, you know, what is it, anything in you know, commercial multifamily that really intrigues you now? Is something like, you know, I really want to get into, you and the firm want to get into now, or is it that we just want to grow?
So from the firm's perspective, we work with sponsors because we're not the sponsor.
Mm.
We work with sponsors that have $1 billion minimum AUM transactional. So we made, when we chose like the niche that we were gonna kind of go for and make a name with, it was based on the sponsor. And so like really finding those relationships, like we currently are working with one multifamily sponsor, the others are not really active. So like a couple of them are they weren't entering the market at all. Not really sure if that was like a good move. We'll see, because asset prices are expected to continue to just inflate for the next few years. But as a thesis, what our thesis has always been and remains the workforce housing. So the Class B, value add. We like short turnaround times in hot markets, which is where our sponsor currently is. So Vegas, Dallas, and Phoenix. And so we've been in the Phoenix market for 3 years with them. And then they entered the Dallas and the Las Vegas market this year. So they do we underwrite to 3 years, but they always flip it in less than that. So in really hot markets like that, currently we prefer a short turnaround. In other markets, like maybe Midwest markets, a 5-year hold maybe makes a little bit more sense, because it can, there's less of, how do you say, some of these hot markets can also, maybe get hit really quickly too. So we don't know that there could be the sustained growth, let's say over 5 years. We're very conservative in how we underwrite. So like when, some people might be like, yeah, no, 5 years is going to be great. Maybe possibly. We're just not comfortable with that kind of risk. And also finding sponsors that fit our underwriting standards in some like secondary, tertiary markets is really hard. So on the multifamily, we're really looking at sponsors that can execute. And that's really important to us. Like I personally invest with sponsors that don't have anywhere near that, because there's people that I've met in my journey that I really believe in them, and I believe that they'll do right by me, and I think they'll do a good job, and I like the fundamentals of the deal. As a company, though, we don't invest with anyone less than $1 billion. So we look at multifamily as I'm sure all of you are looking at cap rate compression. And that's one of the reasons why we started to diversify into the single family rental space, is to build portfolios there, and to diversify that. They have great yields on the single family rental, but you have to do it at scale. It's not like, oh, let's buy 10. It's let's buy several hundred, let's buy a few thousand. So we have different ways of diversifying risk and still keeping that workforce multifamily thesis running.
Okay. Now, I didn't say this at the top of the of when I first introduced myself, but this whole month is Women's Month, women investors, and we did the same thing in April. And but I just want to ask this question: how is it for you as a woman in a male-dominated space in real estate? How is it an experience for you?
It's always been really great. I've never had a problem. And I was thinking about it. I was actually having this conversation this morning with Adam Carswell. And I've just never thought of myself as like not the same as anybody else, if that makes sense. So I never like approach, I don't think that anyone's trying to keep me down or like against me, or the system certainly has other people in mind as winners, and the system is structured in a certain way. I personally never approached anything as though something was coming up against me, if that makes sense. Like I would just show up, I'd be like, hi, I'm me. Like I would never think, oh, I'm a woman in this man's world. I would just show up and just expect people to treat me right. And if somebody didn't treat me right, I'm going to walk away. And I've done that plenty of times, but it never and yeah, I mean, I've dealt with a lot of like sexist remarks and like all kinds of like stupid stuff, but I just chalk that up to them being stupid. And you know what I mean? So I just never took it. I never took it that way. And I really attribute that actually to my dad, because growing up, he had 3 girls. I'm the oldest of 3 girls, and he told me, he always kind of treated me like a boy, in a sense, as like the old, like the boy of the family. And like, we were always told you can do whatever you want and you're strong. And my mom's really strong and resilient. And so those were our role models. Like, we were told you do whatever you want. And do what we tell you. And that was like a whole other it's like a whole other thing. It's like, no. But they raised us to be really strong and independent, and not to think of ourselves as anything less than have like, just proud of who we were. And like humble. I find the humility was something really important in my growth. Because I wasn't always so humble or aware. I was always like, no, I need to get ahead. I need to, I need to succeed. I need to, like, make my dad proud, whatever it was. And so I would just step on people's toes and not really like have any awareness of other people. And then I really developed an awareness of other people. And that was a game changer for me, was the awareness of other people and how I was being received by them. And so that's probably also why for a long time I never really had a problem, because I was actually oblivious to how somebody else was possibly seeing me, so I think that probably, if I think about that now, probably helped me not realize that maybe that people were trying to treat me unfairly. I just wouldn't take it.
Right. I got a couple more questions I'll open up to the audience. So what, going back to the Bitcoin again, what interests you about it? Did you first, like when they first come out with Bitcoin, did you get into it, or did you gradually get into it after the masses or more people got into it?
I first invested in Bitcoin in 2013. So I invested really early. I went to the first Bitcoin meetup in Los Angeles, and I love innovation. I love like the future. I love everything that like increases efficiency, that just, it's very interesting to me. And so I thought, okay, this is crazy. I have no idea what these people are talking about. I have no idea. Because this was also the beginning of me coming into real estate crowdfunding. And so you could almost say that had I become like, if I had been like really into it, I might have gone that direction, but I went into the real estate crowdfunding direction. So I bought a few of these coins, and then I got really busy with real estate crowdfunding, and then it crashed. So I was like, well, I did tell myself that whatever I invested in this Bitcoin thing was money I could afford to lose, and it wasn't that much. And so I never really like thought about it again. Until around 2017, when it cycled back up, and people were talking about it at the fintech conference, and somebody said to me, oh, did you see it's 1,000, it's up to 1,000? And I thought, oh good, well, I'm in the black again, that's nice. $1,000 a coin. And I was in the middle in 2017. I had left that startup, the crowdfunding startup, and I was consulting. And so I was in the fintech industry. At that point, I was very well known in the fintech industry. And so I was doing a lot of consulting. And so I was at this conference, and people were talking about Bitcoin and blockchain. And I thought, oh, how interesting. It's like a real thing. And I watched it, and for a minute I thought, oh, maybe I could go into this industry, because I saw a lot of my colleagues from crowdfunding jumping into ICOs, into the initial coin offerings. But to be honest, like by the end of 2017, I was actually really burnt out. And I thought, I got to take a break. And in December, it's running, right? It's running like close to 20,000. And I saw yoga teachers on Facebook talking about Bitcoin, and I was like, that's a top. And I was right. And so I didn't sell it. I just kept it. Crashed again. And so I was like, okay, well, that's that again. So I just kept it. I never touched it. And then I joined Alpha, did my thing. And then at the beginning of this year, actually, I didn't even know it ran in 2020. But at the beginning of this year, it started to kind of come back. and people were talking about it more. And then I saw the price and I had no idea. And then I thought, something's different this time. Just something about it, just sort of like very intuitively was like, something's different this time. This is a different cycle. And so I decided to get myself up to speed to the degree that I could, because it moves so fast. And then people were talking to me about DeFi. I'm like, what's DeFi? And so I've just been spending time like getting to know it. So I got into it. That's a long way of saying I got into it early because it was an innovation and it was kind of cool and fun. And now I'm in it in a really big way. Like I said, I'm a partner in a fund, because from a macroeconomic perspective, with everything that's going on with inflation, with potential scenarios for ongoing inflation, with currency devaluation, for just everything that seems to be piling in, when you're in this kind of an environment, you want to invest in scarcity. And it kind of doesn't get more scarce than Bitcoin. And one of the reasons that I feel that it'll run up, it'll come down, it'll run up, it'll come down. A lot of institutions have really been buying in. And so that gave me, that to me was a signal of like, if the institutions are getting in, and then you have government starting to implement it, and it's still really early days with all of like the innovation that it can bring to society. But from a purely investment perspective, it's a scarce asset that's being treated as an asset. And I believe in it fundamentally as that. And so that's why I'm really interested in it. And then everything else, DeFi and alts and NFTs, like that's basically crazy wild startup land. So I do a little trading. I keep up with it, but to be honest, I'm not built to trade. I'm not a good trader. So I like buy and hold. And so I prefer, like, if I'm just trading my own stuff, like, Adam, it runs the fund and does all the trading. But like for me personally, like, that's why I decided, I'm like, I'm not going to trade myself. I'm not built for this. I'm going to find professionals who are, and then that kind of relationship just developed.
Well, I think you know your strengths, and that's good right there. I mean, because some people say, "Oh, well, your ego gets in the way, and then they lose a whole bunch of money because they want to use the ego." If you know your strengths like that, and it might not be the best thing, why not? I think that's smart of you and mature of you to do something like that.
Yeah, thank you. Yeah, and I wasn't always like, I lost everything I had to fraud, also in 2013, because of my ego. Because and here's the thing, like, I knew something was wrong. Like my intuition was like going off like alarm bells, but my ego wanted this to work out so bad that I just was like, I like rationalized it away. But the whole time it felt wrong. There was like, and I wouldn't tell anyone. I was scared to tell anyone, which should have been like the biggest signal to me. But of course, that was my whole issue, was this pride and like overly independent. And I felt like I had something to prove to, I don't even know who at that point. So I ended up, I ended up losing $250,000, which was everything I had to fraud. And that was also the reason why I ended up going into real estate crowdfunding, because at that point, like, I had literally no money. And so I needed a job. And I just built, again, I was like one foot in front of the other. I'm like, you can't keep me down. In a way, it's just money, right? And I kind of figured, if I work for 5 years and I can save for $50,000 a year, I can get it back, right? I kind of was like, talked myself into it a little bit like that, so that I didn't feel as bad. But I mean, I sat with that in shame of myself, like humiliation. And I didn't want to tell anyone, because I was so humiliated and ashamed, because I have a background in investing, and this was a private placement. It wasn't real estate. It was a private placement. So that was a really big life lesson for me around around the ego, like you said. And so now, especially like when it comes to like choosing partners and investing and knowing my strengths, like throughout my career over the past, especially the past 3 years have been just exponential personal growth for me. And ego death, like a lot of just killing, just like, I don't believe you should totally kill the ego, but my ego's gone through a lot of death because it's just been put in its place so many times. And I'm so much more kind of like soul centered, if you will. Like I just am so much more connected to myself rather than these ideas of who I thought I should be. And everything about my life has been so much better because I let go of these ideas and just focused on like what mattered to me and on good people. And like, I think that's been like my greatest success.
Wow. Wow. So last question before I open up for the attendees. I mean, just going back to what you just said. So if you talk to, younger people and things like that, and you could talk about your experiences, what would you tell them? What would you tell them as the biggest takeaway? Because it seemed like you learned trial by fire for you. But it got you, but learning got you to the point where you're at right now. So what would you tell somebody who's younger, who's just starting off in real estate?
Oh, so I would say be part of a group like this, like have mentors, whether they're official mentors or not, but like stay humble and don't be afraid to ask questions. Like don't be afraid to say, I don't know. Like that to me is the number one thing. Like you can bounce back from anything. Like I like 100% believe that like our existence, like we are not given in our lifetime anything that we cannot like transmute into strength. Like every one of us goes through at least one big challenge, right? And there's so much like that helps us to find just how powerful we are. And so not to be afraid of things also going bad. Like I would prefer not to lose, not to have a loss. I would prefer not to be like, not to go through another challenge. Like I obviously have a preference. I don't like discomfort. Nobody likes it. But I can handle it. And I've been able to handle everything, including like some pretty severe health issues that I've had. And like every time I kind of like dig in to some fountain of strength that's inside of me. So for young people, I would say, get help, but be willing to admit, like be a lifelong learner, like be willing, like be like really humble about what you know and what you don't know. My experience in the real estate industry has been one of just people are so amazing and so helpful and so generous and so willing to share in someone else's success or help them succeed. Like I've met honestly like nothing but really great people in real estate. And so I think that's one of my favorite things about this industry is that there's so much camaraderie, like there's so much support, like, so use it. Definitely use it and use that support network and lean on people. Because we like all of this happens like as a team, right? There's never just one person that does everything by themselves.
Makes a lot of sense to me. Okay, guys. Man, you see that she power packed a lot of great advice. And then she shared a lot of her background. And thank you so much, AdaPia. Who is first to ask a question? Matter of fact, you know what? I see Lawrence. You're next, but I always like to ask Claudia since she's our longest investor. So Claudia,
thank you for being here and sharing that your journey with us and information about like your field. So about like Bitcoin, right? So they say you shouldn't jump into something that you don't know, like, well, you don't understand. And after like reading and research, I mean, not a lot, but and I feel like you mentioned DeFi, I have no idea what that is. And I feel like I've done a lot of like looking YouTube and trying to find out, what it is. And then, that's one thing as far as like, it's kind of like new and scary. The other thing is they say you shouldn't like investing, like you shouldn't invest when everybody's talking about it and it's a hype. Like you should really invest when it's like nobody knows about it, when you did, which was awesome back in 20, in the past. And so those are my 2 points. If you can
oh, they're great points. Oh yeah, they're really great points. Yeah, I've thought about that a lot. Like and there's like a counter argument to the don't invest in what you don't know, which is you wouldn't invest in almost anything. You don't, like, if you really take it, like, because that comes from Warren Buffett, where he's like a fundamental investor and he like gets to know a company. But I like look at ETFs, and I'm not making a case for Bitcoin. I'm just saying, like, sometimes it's good to have different perspectives. Like, I don't know. I know what an ETF is. Like, my 401k goes into ETFs, and I do like choose my ETFs, but do we really know the ETFs? Like, do we really know what fundamentally is moving those markets? I think, so that's like one thing. I would say with the, and it goes together with the hype, right? Because there are a lot of voices that say that Bitcoin, it's like this hype thing, and it's gonna, you know, there's bears, you know, there's people that are short it, etc. You know, it's kind of like Tesla, right? It was like he's got tons of people that hate Tesla and short Tesla and do all these kinds of things. So I would say when you're looking into it, what you're wanting to understand of any of it, right, is whether you believe that it has value. And so that for me was a long journey, because I bought it in 2013. Like, if I had been more aware, I would have been buying the dips. I would have bought more after it crashed, after I bought it the first time, but I didn't know what I was investing in. And so I didn't buy the dips. You know, so what I did when I bought Bitcoin wasn't really an investment. I mean, I thought it was a gamble. And it's just like, it's just changed so much. Now, fundamentally, it is a fundamental part of investment conversations, of like macroeconomic discussions. And so I went from there to really understand. I'm like, why are people talking about it from a macroeconomic perspective? And there's a lot to learn. And so there's an element of trust in something. I mean, we're witnessing the birth of an asset class. Like, that happens once every like however many hundreds of years. So, and it's still early days. So I think it fundamentally is trying to find some information about Bitcoin in like what people believe about it. Like, there's investment banks are also putting out reports about it. So those were really helpful to me, like coming from, you know, like the Goldman Sachs report or the Citibank report. And you can look that, like, you can Google like Citibank Bitcoin report, and they put one out this year where they were pro Bitcoin, and the one that they put out maybe even last year, a couple of years ago, they were like no Bitcoin. So, you know, and then you have like different voices. Like, you have a Jamie Dimon of JP Morgan who's like, Bitcoin is worthless, but JP Morgan's been buying it and offers it to their customers. So there's a lot of like disinformation. So it takes a bit to find for yourself what level of comfort you might have, because you might say, hey, I'm allocate like 1%, just so that I just want to, like, even if it's a little bit, which is what I did in 2013. I'm like, here's like a tiny little bit of money, because I think it's interesting, and I thought it was really interesting technology, and it could be something big, and it worked out for me. But you know, my fraud loss didn't. So like, you know, it's hard to say. And so the hype is like, I wouldn't get my news from Twitter. And the best place really is finding people who are having like conversations about it that aren't like the Twitter spaces, or even sometimes Clubhouse, because you have a lot of people who are very passionate in different ways. There's some good podcasts about it. So it's like finding a voice, like finding somebody that when they're speaking about it, you feel like they can be trustworthy, and then like you can even like research them a little bit and see. But like generally you'll have a sense, like, does this person seem reasonable to me? Like, are they, you know, are they speaking in a way that is understandable? And so that's how I would think about that with the hype. I personally don't believe that it's hype. Is it volatile? Yeah. Oh my God. It's really volatile for sure. I don't believe that there's hype. I'm actually like really bullish on what it can do to help other countries and people that are like in like very real like financial slavery. Like you can read about what Bitcoin's doing in Nigeria and South America, and like I'm very much like I like the heart of an activist. And so when I see what Bitcoin is doing, like how it was like the cryptocurrency, I think not just Bitcoin, but cryptocurrencies were the only kind of money getting through into Afghanistan during this whole thing that was happening, because like you couldn't even get like Western Union, like the only way that these people could get money in or out was cryptocurrency. And like the remittance issues that it solves with third world countries, or just, you know, the people, they're not just third world, but like El Salvador is like any remittances that a lot of these countries, like most of their GDP, it comes from taking like 30 to 40% off of remittances that family members are sending back to their family in that country. And the government or the banks or whoever, they're all corrupt. They take 30 to 40% of it, and then they don't even have ATMs to get their cash out. Like the system is broken. And from a fundamental philosophical perspective, Bitcoin was created so that the system couldn't continue to like mess with people. Whether it will solve it, I have no idea. But I do see that the adoption of it more and more is starting to stabilize. I don't think it'll stabilize volatility, but it's not something that's going away. I don't believe it's something going away.
Thank you. That's awesome answer. Thank you.
All right, thanks.
Mr. International.
Come on, there you go. Here you go. Good afternoon, good evening, everybody. How's everybody doing? Thank you for a great presentation, AdaPia. That was a great presentation. And you know, what caught me the most is you know, your grit in coming back. You know, because you said that that, you know, you lost your money and you didn't didn't stay down. Where did you get all that? Where did you get that? You told your father said you could do anything, but where did you get that grit from at that time to come back?
Oh, thank you. I really appreciate that. I don't know. I think I'm just like, I'm like that. I think it's just like who I am. I'm a person, like, if you tell me not to do, like that I can't do something, I'm not a contrarian. But if you're like, you can't do that, I'm just like, oh no, yes, I can. Like when I started working with my sister, because she's an artist, and the whole business plan was to put her art on product, because that was something that was starting to happen. And people told us, you can't do that. You can't put her art on mugs. And I was like, yeah, oh yes, I can. Yeah, watch me. And we put it on handbags, we put it on furniture, we put it on clothes. We did like, it's this whole licensing industry. It's really fascinating. We made so much product, or other people made product, and they would pay us to use her images. So I'm like, you don't tell me I can't do something. And so in a way, it was weird. Like it was the worst. It was just such a gut punch. Because I mean, because the guy, okay, I'll finish the story later, but basically, because I got a call from the FBI, and they're like, oh yeah, such and such, because he also defrauded a state charter school. So I just sit with the FBI. I'm like, oh my God. And I thought, what if they try to take me down, like watch too much crime TV, right? I'm like, what if I get implicated? What if I was like, oh my God. And so I just like I guess I had to dig deep, but at the same time, like, you know, when you're maybe like you're in something and it's really hard, but you're the one in it, it's like you're normal. And it's like, well, this is how it is. Like, I can't deny reality. This is how it is. And I always know I'm going to be okay. And so I was like, well, I guess I better get back to work. Like, I just literally was like, what am I going to do about it? I put myself here, you know, what am I going to do about this situation? I have to keep moving forward. I don't know how to stop. I guess I don't know how to, it's just my nature, which is also the nature that burnt me out, to say I don't know how to stop.
Thank you. Thank you.
Yeah, thank you.
Sia Senior. I don't know if she can talk or not. She said, how would you recommend going about opening an account to purchase Bitcoin?
So there's lots of different ways to do it. If you're interested in it, I would recommend dollar cost averaging. Don't just throw a bunch of money in one shot, right? It's like stocks, like you really want to dollar cost average. For my dollar cost averaging, I use something called Swan Bitcoin, and it's the one with the lowest fees because there's really high fees with this stuff too. So like you can buy on Coinbase, which is the most popular, and you can trade different things. So like Coinbase is the one that everybody knows the most. It's a publicly traded company. I use Swan for dollar cost averaging. It's a little bit simpler. So those are the two. You can use Gemini. That's another platform, but you can buy it on Robinhood if you have Robinhood. So my recommendation, if you're going to do it, is to try to dollar cost average it over time.
So you said Robinhood. I've heard that you should not go to Robinhood to do that. Why? I mean, have you heard the same thing or?
Yeah, I said it because I know some people have it.
Right.
Because I know I was speaking to a friend of mine and she's like, oh, I have Robinhood, so I'm going to do it there. And I was like, that's fine. Robinhood has not, that they've had a real reputational issue this year with the whole situation where they basically cut people off from being able to trade GameStop. And basically what they did by doing that is they disallowed them to make gains. And that pissed a lot of people off, right? Because again, it's the system that protects you basically, like, your Wall Street, your hedge funds and what have you, and then retail can't make the same gains. And so that's what DeFi is. So basically DeFi is a bunch of like protocols online that allow you to trade like hedge funds do, but you're trading in cryptocurrencies. And it's also that it's super high risk. There are all kinds of things can go wrong with that. There's some platforms that are like well known, but you do liquidity swaps and you can do all this crazy stuff that hedge funds do. And so the reason that Robinhood, you just got to question their motives at this point, is really, I think, what it comes down to. I don't think there's anything technically. Like, they are also a big company with highly regulated. So some people feel more comfortable because they're a highly regulated company than going with going off and finding some decentralized exchange, for example, that has zero regulation. So it just depends on how people feel about regulated versus not. But I think the whole Robinhood thing is more of a reputational kind of, people are boycotting it because they literally stopped people from being able to make trades and therefore make money. Yeah.
So if you guys, just let you guys know, if you miss anything from AdaPia, you can of course reach out to her, but also this replay will go out tonight. So if you guys want to see the replay of this, but any more questions before we go to breakout rooms?
Yeah, I have one question. Thanks for the presentation, first off. And like, based on your knowledge with cryptocurrency and blockchain technology, as well as your knowledge with real estate, do you see some sort of merging of that technology in real estate, or where do you see that going in the future?
Yeah, there's a bunch of companies doing work in that space. There's even one called Accru, AKRU, that is tokenizing buildings. So if you own a building, they have it all set up where you can basically tokenize your equity and raise capital on a token basis and have a secondary market. And his whole life has been real estate internationally. And so he's doing that for blockchain. There's something called libertyfund.io that is a triple net lease fund that's fully tokenized. So people are doing it. And there was even a list of, 50 top real estate blockchain companies. Like people are across the board, like they're trying to apply it to so many different things. And I think with real estate, what it actually comes down to is blockchain plus IoT, so like plus Internet of Things plus AI. And so it's the use of all of these technologies to create efficiencies, because, as we know, real estate's not like the most efficient industry. And so there's really this, it's like taking prop tech to a whole new level with blockchain. And then on the investment side, we'll see. I mean, the promise of it on the investment side, and the regulatory hoops are like a lot, right? Is the secondary market. And nobody's really been able to accomplish secondary market yet. And so the hope is that somebody, and Mohsen, he's the CEO of a crew, he's like, what do we call him? He's like, the Kool-Aid man. You know what I'm talking about? The cartoon, the Kool-Aid man, like busts through walls. Yeah. He's that right now. And he's pushing and he's gunning for it. And there's so much regulatory work that goes into it. But the idea is to make real estate more liquid for everyone, not just REITs, because they just scrape so many fees. It's ridiculous, right? So it's being done. There's a lot of really incredible entrepreneurs out there that are trying to do really good work with blockchain and real estate, like whether it's like utility stuff or investment.
Anybody have more questions? Because I have one more question to ask, but any more questions, please? Oh, that's the great come on here. Cool. So my question is this, I met you through Clubhouse, and Hunter was talking big about you. Of course, Adam talked about big about you. So, and I can only imagine the people you have met in your career, but how has connections and network helped you in your career?
Oh, yeah, it's so important. And it kind of goes hand in hand with that lesson that I learned about not asking for help, because I was also isolating myself. Like it's this whole big realization that I have. I'm very contemplative. I do a lot of self-reflection. So I'm always like trying to understand myself and how I'm like in my own way. And I've been like, I isolated myself in so many different ways, thinking that I was being independent because that's how I grew up, being told that like that was a virtue for me, was being independent. But I went too far in that direction, right? And then when I started to kind of open up, right, and let people close to me too, because I just wouldn't let people close, then like ask for help and maybe show weakness, which is really not a real thing. No one's weak. Then I started to build these really amazing relationships. And so those connections have been so important to me. It just makes everything better when you have like cool people to do things with, like just on a fundamental level. And they've been really helpful, because when I can get over the like, oh, I don't want to show that I don't know something, so I'm going to ask, right? What happens is the other person's like, oh my God, of course I'll help you. Of course that information, because I do the same thing. And that's the irony. Like I'm so open to helping anyone, and I would never judge anybody, but I judge myself. So it was really me needing to get out of my own way. And then those connections, and then those relationships, and then it's just this like beautiful like web that I don't even know where it starts and it stops anymore. And it's the foundation. It's the foundation of my success, for sure.
That's what's up. That's what's up. Thank you so much for being a great guest speaker. Like I said, guys, this is Women's Month. Matter of fact, we got another guest speaker who just came on later on this month. That's Esther. She'll be in 2 weeks. She'll be the guest speaker. So I'm excited for that. Alicia, I told you we're gonna have to talk so I can schedule you on this meetup as well as a guest speaker. So And AdaPia, I just want to let you know that that you're so liked so much that I'll get that one of our attendees is calling in from Germany.
Aw.
That's Claudia.
Thank you. I'm so honored. Thank you for having me. Yeah, I hope that I hope it's been helpful. Like I know there's like a lot, and we talk about a lot, and sometimes I feel like I can't really like dive into anything. And so just reach out to me. The fastest is on LinkedIn, actually. If you just like ping me on LinkedIn, and then if you want to chat further, I'm always happy to do that. And if I can support you all in your journeys, like please let me know.
Yeah, absolutely, absolutely. I might have some capital grazing questions to ask you.
Yeah. Yeah. Well, I mean, yeah, just like, that one is like, it's really just like, be yourself and be a good person, right? Like technically all the technical stuff is like, you learn the underwriting and you can, figure it out, have a good deal, have good partners. But like in capital raising, it's do the right thing. Like it's almost like dumb. I'm like, it's silly almost, but it really is just do the right thing for those people, because you can't go wrong if you do the right thing. Like your deal can go wrong, but those people will stick with you because you're going to do your best, and you're going to be transparent, and you're going to be open, and you're going to like, especially if something goes wrong, right? Like, yeah, this went wrong, here's what we learned. Like so to me it's almost like and I know like you've been with Hunter for a while too, and he has a lot of really great technical, like he's such a technical person about things, and he's really great. And one of the things that I don't know if he talks about this or not, but he's also very genuine in who he is and what he knows. You know what I mean? Like he's very authentic in who he is. And he doesn't try to be somebody that he's not. And I've invested with Hunter because I trust him. Right. Because at the end of the day, like a deal's a deal, can go wrong. Your underwriting can be wrong. Stuff happens. But I'm fundamentally investing with people first and foremost, and then the deal.
Right. Absolutely. So that's wonderful. Andy, check your chat. I just sent you a thing on chat, so you up next too. So just to let you know. All right. AdaPia, I mean, you're welcome to stay. If you want to, you're gonna go to breakout rooms in just 1 minute. So you're welcome to stay or go if you have to. I know you're a busy woman.
All right. I might stay for a little bit. I can't stay for the full, I won't necessarily stay for the full hour, but I'll stay for a little bit.
Okay. Yeah. Awesome.
Cool.
So I'm gonna say this real quick. As you guys know, I don't say at the start, but this meetup is a proud affiliate of the GOB network. Also, we are affiliate of Make Real Estate Real. So you guys, any questions about both organizations, please get with me. I'm not gonna hold you right up. I'm gonna stop